I guess if someone were really trying to stabilize this, um, it would start with changing the structure of spending around Social Security, Medicare, and defense. You have to kind of go blank sheet of paper. Do we need 800 foreign military bases? Is that keeping us safer? No. And what's the cost of all that? That's that kind of thing. Then it's like, okay, so we have systematically kind of made our food less healthy, and now it's kind of ballooning into really high healthcare expenses on a per capita basis. If you look at Japan, I mean, they're going through a significant aging problem. They're much more aged than us, but they spend something like a third per capita on healthcare and get better outcomes.
To describe the current state and path of the US economy, renowned macro analyst Lyn Alden has been using a meme depicting a bus on a rail track with a train approaching. According to Alden, the bus represents how markets have traded for the past 40 years, and in another frame, we see the bus get destroyed by the fiscal dominance train. Alden suggests that this bus is everything we've believed about the economy and the markets for the past 4 decades, which were marked by monetary dominance. Because most of the money creation during these decades came from bank lending, monetary policy was effective as a tool to either re-accelerate or slow down the economy. However, the US and much of the developed world have shifted to a fiscal dominance era, characterized by very large debts and fiscal deficits. As such, central banks like the US Federal Reserve no longer have the appropriate tools to address the situation. Their options become constrained by the fiscal side. Raising or lowering interest rates doesn't impact the fiscal side in the same way it impacts bank lending and credit creation. Alden warns that moving forward, metrics that were important during a monetary dominant era are likely to be less relevant. In various posts and interviews, Alden has also warned that the situation is now almost completely out of control because the only viable solution, an austerity program that will restore the balance of things, will never be considered. During a recent interview on Wealthian, Skybridge Capital CEO Anthony Scaramucci and Alden delve into how the US economy is on an unsustainable path and how this all ends. In Alden's words, nothing stops this train. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and let's dive right in. During the interview, Scaramucci asks Alden what actions she would take first as a Federal Reserve chairman or as a politician looking to change the gloomy path the economy is on. Here is her response.
During the pandemic, Powell called for more stimulus. So we kind of crossed the line where normally monetary policymakers don't, as a general rule, they don't really comment on fiscal policy. They try to be not kind of directly partisan. But he said, we've used a lot of our tools. There needs to be some fiscal support, right? So he crossed that line in that instance. What I would say now is that what we're seeing on the other side of it is that there's this kind of overflowing amount of fiscal hitting the market. But he's very reticent to comment on the fiscal side because he kind of goes back to the position of not really seeing that his position. But I think at this point, a central banker, if they're trying to be kind of intellectually honest about this, it's time to say it's hard to do any of my mandates when deficits are this structurally big. Because a central bank's tools are primarily designed around accelerating bank lending or decelerating bank lending. That's really what they're mostly geared toward. And we're in a fiscal dominant environment now, meaning that ongoing typical yearly fiscal deficits exceed the amount of new bank loan creation. And so those fiscal deficits are kind of a bigger impact on the economy in many ways than those bank loans. And they can drive things like inflation. They can drive things like nominal GDP running hot with some of the inflationary consequences that come from that. And basically, it's saying, look, I don't really have the tools to deal with what's happening there. And so, if you want those mandates to be in any way met, there has to be a fiscal response. And so, right now, it's kind of politically acceptable for central bankers or treasury officials to say, look, in the long run of time, yes, there's a fiscal issue, but but then they always caveat by saying, we still have plenty of room. No one's going to admit that the actual road is kind of running into issues under their watch. And I think that there needs to be more transparency around that issue. So I basically would say, look, if you want me to be able to do my job, you need to rein in yours a little bit. Otherwise, I would resign and say, look, you put me in a position where I can't meet my mandate because I don't have the tools to meet my mandates. I guess if someone were really trying to stabilize this, um, it would start with changing the structure of spending around Social Security, Medicare, and defense. You have to kind of go blank sheet of paper. Do we need 800 foreign military bases? Is that keeping us safer or no? And what's the cost of all that? That's that kind of thing. Then it's like, okay, so we have systematically kind of made our food less healthy, and now it's kind of ballooning into really high healthcare expenses on a per capita basis. If you look at Japan, I mean, they're going through a significant aging problem. They're much more aged than us, but they spend something like a third per capita on healthcare and get better outcomes. So clearly, we have a kind of a healthcare spending
Is that a
crisis.
polite way of saying that the Japanese are less fat than the Americans? Is that a polite way of saying it?
That is a big contributor to it. It's eating habits, but it's also we have a very processed food industry. So it's not like one group just their willpower gave way over a short period of time. It's the combination of human nature with this very processed um, kind of background structure that makes it all the hard choices are just really really easy to make. So it's our food, both individual decisions, food structure, the way we kind of structure healthcare payments, all of that results in basically just a completely ballooning healthcare expense. Then you can do things like mean test Social Security. I mean, there's ways you can at least try to get that back somewhat on the track. But the problem, I mean, the chance of any of this happening, especially all of it happening together, is exceptionally low. And so I think that structurally, it's going to be very, very hard for any politician, even well-meaning ones, to do that. And even if they get elected on that, probably as soon as they start enacting some of that, they would not win a second term.
Alden's first observation is that reckless government spending and borrowing impact central banks from properly and efficiently carrying out their tasks. She believes the discussion must be had and all necessary steps must be immediately taken if we are to somehow prevent the impending collapse. Yet, everyone who can do that in reality continues to mislead the public that everything is under control. The closest Fed chair, Jerome Powell, has come to acknowledging there is a problem was when he admitted that the US is on an unsustainable fiscal path. However, Powell's solution is for politicians to have an adult conversation about the problem. In his words, the US federal government's on an unsustainable fiscal path. And that just means that the debt is growing faster than the economy, so it is unsustainable. I don't think that's at all controversial. And I think we know that we have to get back on a sustainable fiscal path. It's probably time or past time to get back to an adult conversation among elected officials about getting the federal government back on a sustainable fiscal path. Powell's words suggest that the situation is not as dire as we imagine. Yet, experts like Alden believe it might even be worse than imagined. Let's get back to the video.
So the last time that developed markets ran into a debt crisis was really back in the 1940s. We also see emerging markets run into them today, and so combining, kind of what's happening mathematically today, what happened in the past, that gives us some view of what this kind of thing looks like. Obviously, technology is different, culture is different. There's all sorts of details. Basically, I would say that you start to get certain emerging market characteristics in even a developed country when you run into fiscal problems. So it's not like all the crisis happens at once. It's not like you have a pre-crisis and then a post-crisis. Instead, it tends to be a bunch of um, events that kind of culminate together. And so a key thing that it starts out with is the central bank losing control of its own balance sheet, that it's unable to ever kind of retain it back down, and they find themselves structurally monetizing fiscal debt, and always explaining why they're not really doing that, but their balance sheets, kind of going up cycle by cycle anyway at a faster rate than it used to. And so that's kind of the first step. I would say that we've been in kind of that fiscal dominant situation since around 2019. Ever since we had the repo crisis that probably most audience viewers aren't familiar with, but there was a kind of a financial plumbing issue in September 2019. I would say that kind of marks the probably some of the earlier effects of fiscal dominance. And that wasn't a crisis in the sense that people didn't feel it, but you had that, and then you had the pandemic, and then you had the bank issue of 2023. You had the gilt crisis of late 2022. Over time, these things kind of add up. So basically, what it looks like is the difficulty of hitting a persistent 2% inflation target, which by the way that's only added recently. I mean, their definition of price stability they define as 2% inflation. It doesn't have to be 2%. They could aim for zero, but they don't. But basically, their own target is 2%. The way they measure it, you get a challenge of ever kind of sustainably getting back there. You get money supply growth that is continuing to be significant, an inability to raise rates as much as they want to in the face of persistent inflation, the ineffectiveness of those rates, because again, bank lending is not the main issue. Fiscal deficits are the bigger component of the inflation that's happening. You see more protectionism. You see kind of like narratives like in emerging markets, they'll say, look, it's not our fault the currency's problem. It's outside speculators are attacking it, or people are hoarding it, or you kind of put the blame on some outside entity or some small unpopular entity. Maybe you kind of wealthy people in general, kind of a vague group, and you say, look, that's why our currency's weakening. The outsiders, the wealthy, whatever the case may
Yeah,
be.
scapegoat. You got to have a scapegoat.
Yeah.
Yep.
And I think basically you see years and years and years of that. Now, some of the more kind of acute crisis happened, for example, in the mid 2030s, the Social Security fund runs out. And so if that's not addressed in some way on either the spending or the revenue side, then basically people would only get a certain percentage of their expected benefits after
Mhm.
that point. It would only be fed by current tax revenue rather than the existing fund. So you start to get these kind of mini crises along the way, but it doesn't just go from normal to Mad Max. It
Right.
basically anyone who studies emerging markets sees like a slow kind of train of events.
So investors want to know this, and it's a very simplistic question, but I'm going to ask it. Are we going to be okay?
I think we'll be okay. I think you have to position yourself to be as okay as possible. I think you wanna prepare yourself, prepare your own situation, prepare your portfolio. In any sort of changing times, there are always some people that are okay and not okay. I mean that's true for any period of time. But basically, major changes in currency cycles are not the end of the world. They're just an end of how certain things existed for a number of decades, and then there's some sort of realignment, and then it's in place for another several decades. So it is, I would say it's disruptive, but there are multiple ways to be okay on the other side of it.
The US national debt crossed the $1 trillion mark on October 1st, 1981. During that period, there were a lot of discussions about an impending collapse, but certain factors, including rapid globalization, a profound period of productivity with about 1 billion people entering the labor force, lower interest rates, and peak demographics, have helped the US avoid any lasting damage thus far. Unfortunately, many compare that period with the situation today, using it as an example to predict that the US, especially as the issuer of the world reserve currency, will be able to survive and thrive indefinitely without any consequences. However, Alden argues that the problems are not only re-emerging today, but the situation has worsened because of the much larger debt-to-GDP ratio. However, unlike the 80s and 90s, all the factors that help the economy stay afloat are either unraveling fast or happening at a much slower pace than they did back then. The result, Alden explains, is that the US economy is now in a very precarious situation and tilting on the very edge of disaster. Alden recommends that investors protect themselves against the coming crisis by investing in Bitcoin, one of the few assets that have significantly outperformed currency debasement and will continue to. What are your thoughts on Lyn Alden's assessment of the current state of the United States economy and what's coming? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.